Hello and welcome to another video for myatmm.com. It's time to look for some transactions to track or some new positions to get into. So let's get right to it. Here we are in Thinkorswim's trading platform. We are looking at what happened to our positions in BBWI from last week. I had said that we were going to go ahead and close out of the position or attempt to close out of the position and just sell it for what our cost basis was. Our cost basis was currently setting at 46.50, so I just put a limited order in to sell it for that specific price on March 24th, as you can see right here. And the next morning when the market opened, about a minute after market open, it sold all 200. And we only wanted 46.50 because that's where our cost basis was setting, but it actually sold for 47.09. So we actually did sell it for above our cost basis, so there was a small capital gains there. Now we just need to go over to the web application and close out this transaction and see how to do that in just a second. Here we are on the web application, myatmm.com, and after logging in, it takes us to the dashboard. As you can see, we need to go over to the cost basis page right here. Make sure BBWI is selected, which it is. And what happened is we sold all 200 of our shares. So right here, you can tell that we sold those shares, or sorry, these are the current positions. What we need to do is we need to go ahead and close it out. And since it's in two separate transactions, I don't want that to be the case because I want the save to work better. So what I'm going to do is instead, you can actually do this number. So basically, just change one of these. Actually, we'll just go ahead and keep it this way for now. I was going to combine them and merge them into one record and have it 47 or 46.50 as the price to let it do the calculation. But let's just stick with this because we're going to just make it easier here. Let's go ahead and get Thinkorswim's data up on the screen. All right, so there it is, and here is the actual transaction that happened. And you can't see it, but we sold it for 47.09 was the closeout price. So right here, just put 47.09, and we closed that. And this is going to be the same thing. So actually, this won't be too bad because 47.09 times 2 should be that 94.18, which I'm pretty sure it is. So we're going to go ahead and click submit. After we click submit, this should create the proposed records for us. So click submit. There we go. It actually puts the buy and the close transactions there. And let's go ahead and do the second one. And there we go. All right. So what we're looking for is we're looking for those sell to close, the STCs, sell to close. And in here, we need to make note of these fees because there's 16 cents in fees. We're just going to put 8 cents on either one of these. So the sell to close, and right here, put 8 cents there. And then what we need to do is move each one down one at a time and click save. And then move this down and click save. And so there we go, 47.08.92 for each one of these sell to closes, and that should wrap it up. What we need to do now is delete these. So just click the X to remove them. And so now we are completely out of this position. So to review where we're currently at, you can see we currently have 0 shares. We don't have any positions in place, so there's no shares from puts or anything like that. We don't have any collateral in play. No, we don't have any stocks owned. So we are completely out of this stock, and the end result was we had $117.84 capital gain, and the overall gain loss. So basically, you can see $811. That's what we collected in option premium throughout the time that we've been messing with. So $811 plus the capital gain for an overall gain of $929.17. So that's the end result of our current position. I will just make a note that it does look like the stock did keep on going up, but like I said, we're going to close out of this position. So we had one complete full cycle of the continuous wheel strategy to demonstrate. We've already previously done. Let me go back to the dashboard real quick. We first did it with the stock symbol Marvel, and there's a playlist on the YouTube channel that has the complete continuous wheel strategy that we did with Marvel. That one lasted a considerable much longer. As you can see, we did 32 transactions, so it lasted over the course of, I think, 5 or 6 months until we finally got out of it. But as you can see, we got out of it with a profit of $38.97, and we actually did come out with a small capital gain there as well. And with BBWI, same thing, only we were only in it for 15 transactions, and again came out with all the credits, of course, and we still came out with a small capital gain for the stock price and the stock shares themselves too on top of that. And this QQQ, that's just some iron condor that I was playing with, demonstrating the application previously. But in any case, so we are now closed out of these positions, or this position, BBWI. And in the next video, we're going to be looking to start the continuous wheel strategy up with a new stock ticker, so we can just keep on demoing this process on different stock ticker symbols as opposed to the same one over and over again. I will mention the reason why I do want to, first off, want to move off to another symbol is because just for variety, but also because, as you'll notice, these stock shares have gone up considerably. Like Marvel has gone up into the 70s, and BBWI is heading up into the 50s. I will say that I do like to try and keep the target stock symbols that I'm working with lower. Like in the 40s seems to be like my threshold of the highest that I want to go. And the primary reason for that is because if a stock does tank and start going down, well, using this strategy on it, I will basically be buying more shares and selling cash secured puts for much lower to dollar cost average them. But if I started at 40, if it drops in price in half, then it'll only be in the $20 range. So selling cash secured puts would only cost me $2,000 to do each time. It has a lot less of a distance to fall than if I was doing this strategy on like some stock ticker that sells for $150 or $250. That has a lot further to fall. So this is a way to minimize the risk a little bit more, and to make it more make it easier to correct by, if you bought 100 shares at $40 and then it dropped to 20, well, buying a couple more contracts at $20 a share, you can dollar cost that average from 40 down to the 30s or the mid 20s pretty easily, because the numbers aren't that big. So anyway, that's why another reason why I want to move away from these two for now. And if they were to come back down to that range and the fundamentals still looked pretty good on them, then I would probably go back into them. But anyway, next video we're going to be looking for another position. I want to thank you for watching. Like and subscribe if you haven't already, and go out today to myatmm.com and get your free account so you can start tracking your own transactions. Thanks, and I'll see you in the next one.